Pakistan is a paper-based economy. The majority of our records in the financial, health, education or agriculture industry are paper-based. A patient still carries his medical records in a file when visiting his doctor. A prospective employee still has a paper copy of his university degree. We love paper and are reluctant to change. We are also a nation of manual processes. It is no wonder it takes banks up to 2 months to decide on a credit card or personal loan for a new-to-the-industry customer. While the front-end customer app has seen significant improvements, the back-end remains manual, lacking customer personas and advanced technologies like AI, big data, and robotic processing for repetitive transactions. This results in horrible customer journeys, very low financial inclusion, a high number of staff workers, and high costs. To solve this problem, the State Bank of Pakistan has invited applications for a new license, a retail digital bank. We are talking to Nadeem Hussain, who recently wrote on the subject for Dawn's Business Finance Weekly.
State Bank of Pakistan came up with a special category of license for digital banks. A digital bank is a bank which has no physical presence. The access to customer is through its app or through internet or through its partners. It doesn't have bricks and mortar presence like a commercial bank does. The State Bank, for the digital bank license, provided its approval in 2 categories. In the first category, it says the 5 licenses that were issued were for retail digital banks. That means digital banks, as I've explained, but for retail. Retail is for consumers, for individuals, as opposed to for corporates. So letters of credit and large ticket size items and all that a commercial bank does as a full commercial bank is not covered. It's only for the retail side or the consumer banking side of a large commercial bank. In the second phase, if a retail digital bank wants, it can apply for a full digital bank license. That means, imagine a commercial bank like you have any of the 37 commercial banks. If a digital bank would have the same powers, they would, except that they would have no physical presence like a branch. So they would be only accessed through an app or an internet portal. That's the definition of a digital bank. Why they did this is because there's very little financial inclusion in Pakistan. These 37 banks combined lend to less than 1.5 million individual loan customers with horrible customer journey. So the State Bank felt the need for issuing new licenses so the customer journey could be improved, the underserved segments could be covered, and lending could take place at a lower rate given that there's no branch expenses by these digital banks. A digital bank license is a challenge as well as an opportunity. It's an opportunity if you're able to change the customer journey, if you can scale and get to the size that you need to become profitable. It's a challenge because you have no physical presence, so it will take time for customers to get confidence and give you a deposit. So the lending side is easier. The side where you're raising deposits can be a challenge. Also keep in mind that Pakistanis are just going through their digital journey. They are not that savvy as far as phishing or financial fraud is concerned. Since the digital bank is entirely digital, there'll be many people who will try and manipulate the customers of these digital banks in giving their credentials, leading to financial fraud. So a digital bank can be highly successful and profitable if it has policies which takes into account financial fraud, if it's a lending institution, and it'll take time to obviously build this customer base. Or it can be a failure because if it's not in the lending business, if it's only in the payment business, or it doesn't have adequate policies for cyber security, cyber crime, then it can have serious consequences.
And that's it for today. For more explainers and news, subscribe to DawnNews English.